It's still very transactional, right? So when we look at this lowering from 46 down to 20 for goods coming into the United States from Vietnam, it's still not clear what kind of carve-outs we're going to see for specific products, right? So keep in mind that there are American companies manufacturing in Vietnam, Dell, Apple, Intel, et cetera. So I wouldn't be surprised at all to see carve-outs for any of those products coming into the United States. So I think it's a benchmark in terms of the negotiating style and the process that the U.S. has gone through one-on-one, singling out ASEAN countries. But it's still fluid. I still think that we're looking at a situation that's going to be favorable, I think, to American companies producing in Vietnam.
Yeah, on that note, President Trump said the deal will give U.S. total access to Vietnam's market. But just how big of a win is this for U.S. exporters, given Vietnam's size and spending power?
Will it encourage more investment by American companies into Vietnam, for example? That remains to be seen. I think as supply chains continue to restructure and shift out of China, as ASEAN as a region sort of reshuffles their supply chains, as India comes up, I think there's a lot of potential there.
Another thing that's been agreed is a 40% tariff on transshipped goods, clearly aimed at China. How effective do you think it's going to be in stopping China from rerouting through Vietnam?
So here there's more uncertainty, right? So clearly the play here is made by China, right? Not made in China anymore, but made by China in Vietnam or wherever else. So in that case, it's going to be a bit more of a challenge to identify specifically which goods are made by China and what percentage of a finished product is actually comprised of Chinese goods, right? But I think that is going to spawn a pretty robust service sector trade around transparency, right? Technologies to trace, technologies to have traceability within supply chains.
This, move by Vietnam to drop the tariffs on U.S. goods while its goods are the subject of that 20% tax. I mean, could it prompt Vietnam to kind of relook its export strategy? And then where does it place countries like China or rest of ASEAN, EU even?
Well, here we have to look at the big picture for Vietnam. So what does Vietnam want? Vietnam wants to develop, like all other ASEAN economies, Middle Eastern economies, it wants to develop its technology, right? It wants to develop its technology manufacturing sector. So Vietnam really, really wants to see a reduction in export controls. It wants to see access to U.S. chips. It wants that ecosystem to begin to flourish, right? So I think it's going to have to learn to live with the tariff situation if, in exchange, it gets access, right, to that type of technology, and perhaps it gets, gets some leeway when it comes to export controls.
And what would this mean for U.S. consumers, I wonder?
Well, again, if the cost of, a particular consumer electronic or some other type of good, goes up, then there's only two ways you can deal with it, right? The exporter or the maker of that product can eat the cost and choose not to pass it on to the consumer, or pass it on to the consumer. So clearly consumers will be affected. But again, we just have to wait and see which sectors get carve-outs and whether we see taco, right? The taco phenomenon when U.S. industry pushes back, for example, on rising costs of components coming in from Vietnam.
Well, talk to us about the rest of Southeast Asia, particularly Cambodia, Malaysia. They were slapped with the high rates as well. Cambodia even higher than Vietnam initially, right? So how can they read into Vietnam's done deal to their benefit in terms of what to focus on, in terms of Chinese reliance?
Clearly, the message is if it's made by China, the U.S. is going to target it. Absolutely. And I think in the bigger picture, it's interesting because we can flip that around now and we can say the narrative is now turning into a made by USA, right? So if we look at Vietnam again, it's how are the tariff structures, how's the quid pro quo around export controls, et cetera, playing out to encourage U.S. companies to become players in these different ecosystems. But it all comes back to a continual restructuring of the value chains here in Southeast Asia, India, and beyond.
You touched on China. I wonder how you expect China to respond to this. I mean, could we see Beijing leveraging its own economic muscle and try to counter the U.S. approach?
Well, we're already seeing that, right? So unfortunately, for the smaller countries that are caught in the middle, they're going to get more direct pressure from both China and the United States. And we'll see China and the United States looking to isolate countries one-on-one, as opposed to, negotiating or looking, to negotiate as a bloc, for example, on a more multilateral basis.
When you talk about one-on-one, what are the pros and cons of that versus like group?
Well, absolutely. It's all about asymmetric power. So if you're the United States, you're looking to negotiate with a much smaller economy like a Vietnam to bend that country to its will. So I think that is an unfortunate byproduct of a world where we have gone to a much more minilateral, bilateral environment when it comes to trade talks and discussions.